Market Open Direct Connect, a webinar series for companies to tell their story, why it's compelling and why it's an opportunity to invest. I'm your host, Stuart Walters. I'm joined here today by Edmund Ainscough, Managing Director of Lunnon Metals, ASX code LM8. Edmund will provide an update on the ore purchase agreement with major shareholder Goldfields, along with an overview of the Lady Herial deposit, the highest ranking prospects next in line, and how LM8 sees a discovery opportunity on its lease in the heart of the 16 million ounce St Ives gold camp. Edmund will also participate in a Q&A post his presentation. If you have any questions for Edmund, you can submit them via the Q&A tab at the bottom of your screen, and time permitting, we'll get through as many of these as possible. A recording of this webinar will be available on Market Open and Lunnon Metals communication channels within the next 24 hours. So I'd like to take the time to introduce our guest. Ed, welcome to Direct Connect, and over to you.
Thank you, Stuart. Thank you to Market Open for hosting the webinar. And thanks to those people who've registered and attending. I think we've got a mix of retail and some of our top 10 and top 20 shareholders who we're very grateful for their continued support. So look, I'll jump straight in. And this presentation was lodged on Monday along with the webinar link. So I encourage you to read the disclaimer and the competent person statement at your leisure. Without a doubt, I think this is the most important slide in the entire deck. So I'll spend a bit of time on this. For those who aren't current shareholders and maybe haven't followed the story, we've been working in this area since 2014 as a private company, founded probably most famously by Ian Junk, who has a long history in both Kambalda, nickel, and with the likes of Mincor and Sally Malay, Panoramic Resources, in terms of taking assets off WMC as they were back then and bringing them into production. So we listed in 2021. We were very successful. Obviously, 2021 was a big year for IPOs, and we were part of that very large cohort of companies that listed that year. We made a pretty significant discovery called Baker, and I've got a few slides on nickel at the end. But for 2 years, we were obviously very promotional about the nickel aspects. A lot of our existing previous shareholders at the IPO and in the equity raisings we did subsequent to the IPO were very experienced in nickel, very experienced in nickel sulfides, had done very successfully with previous investments in the nickel space. So Kambalda and nickel in Kambalda needed no introduction. It is one of the world's great nickel belts. So that was 2.5 years, and obviously most people will know that the nickel market's been pretty depressed and the sentiment's been poor since the middle of 2023 and the beginning of 24. We had actually finished all of our nickel drilling and we turned our mind to gold. And one thing we've, as a management team, that we've realized in the last nearly 2 years now that we've been focusing on gold is there is very little knowledge, very little information about St Ives, which is essentially exactly the same camp as the Kambalda nickel camp. Now recall WMC ran St Ives and Kambalda as a single operating unit from 1966 for nickel and 1980 for gold, right the way through until they sold the asset to Goldfields, the current owners, in December of 2001. I was the last chief geologist for WMC at the time of that sale, and we and the rest of the staff at St Ives got sold with the furniture to Goldfields, and therefore I was the first chief geologist for Goldfields. Obviously, having sat inside WMC were very focused on Olympic Dam and on nickel. You didn't hear a lot about St Ives and their gold business, then they sold it, and now it sits inside Goldfields. And Goldfields have done an amazing job, and quite simply, this is one of Australia's great gold camps, and probably the one you hear least about because it sits in a foreign company. It sits inside Goldfields, and they really very rarely present locally. And when they do, they're obviously covering a very large business. So here we sit. The St Ives camp sits between the Boulder-Lefroy fault zone, which, as the name suggests, runs from here in Kambalda on Lake Lefroy all the way up to the Golden Mile and Boulder, with the super pit sitting inside Northern Star, and to the west is the Speedway fault. It's actually quite a narrow corridor. It's only 7 kilometres wide. It's about 35 kilometres long. So broadly 230 square kilometres. It's produced 16 million ounces. It has produced over 300,000 ounces every year for the last 32 consecutive years. And peak gold, in terms of production, was 600,000 ounces in 2002, the year that Goldfields had a full year of ownership. I'm very proud to say I was the chief geologist at the time. One of our founding shareholders, Darren Headley, was the mining manager. And for a brief time, for about 6 months, St Ives was actually the second largest gold mine in Australia after the Super Pit. It's produced 170 million tonnes at 3 grams gold. And we are completely blessed to have our own 23 square kilometres right in the heart of that corridor. That's close to 10% of the corridor. Just for reference, on this slide, I've also put the Beta Hunt sublease. That's about 10 square kilometres that now sits inside Westgold. They don't own the tenements. That is a sublease. Those are Goldfields tenements. We own pretty well all the gold rights, and we definitely own all the nickel rights. We own about 90% of the gold rights. A couple of areas around these 2 small dots where Goldfields reserve the rights. Everywhere else on that 23 square kilometres, we own 100% of the gold rights. And as you can see, inside that yellow polygon, it is a bit of a hole in what could be described as a golden donut. And most impressively, Goldfields have spent a significant amount of money. When I was chief geologist, our annual budget with WMC was about $3 million. The very first year Goldfields took over, the executive management gave us $25 million, and they've effectively maintained or increased that level of spending ever since. So they found 11 million ounces, and most impressively, in about 2010, 2012, they found Invincible, and we'll talk a little bit more about that in a couple of slides. It is the biggest single discovery in the entire history of Kambalda and St Ives, and it was found last. So as you can see, there's lots of gold dots. It's no secret that they actually sit under the causeway. That causeway was built to get from the north side of the lake and the nickel assets there to the south side of the lake, and the nickel assets that now sit on our tenement package, Foster and Jan, which isn't labelled. And because the causeway was there, they could drill. And because they could drill, and once they realised there was a significant gold camp there, a lot of the gold was found under and close to that causeway. Obviously, there's no geological reason for that. The entire belt is endowed. But you can see, because this was a nickel belt, and similar to Karora, the Canadian company that got sold to Westgold, they have found significant amount of gold in an old nickel belt, and we are in exactly the same geology in the heart of one of Australia's great gold camps. I often wonder, I presented this at Noosa, that if this camp was owned by a Northern Star or an Evolution or a Mealis Resources, my job would be so much easier, because you would hear so much more about St Ives, about its production capacity, and about the discoveries that Goldfields makes regularly. But unfortunately, it doesn't. It sits inside Goldfields, who are our major shareholder, very supportive shareholder, both operationally up at site, but also corporately. So this slide's really important. I encourage, if there's any questions to do with the overall geological endowment in the St Ives Kambalda area, please lodge them, and we can circle back to this slide at the end of the presentation if need be. Just touching corporately, the key messages here: we have no debt. We're in a really good cash position. We did see the nickel headwinds coming in the middle of 2023, and we raised $18.5 million back then. At the time, we had $17 million. That money we raised ostensibly at the time was to put us in a position to develop our nickel assets. Obviously, as I mentioned earlier, the rest is history on the nickel front, and we're very fortunate to have that cash in place when the nickel market crashed. We've been extremely prudent. We've got an enterprise value of 55 million. Importantly, we're covered by 3 of the brokers, Shaw and Partners, more over east, Euroz Hartleys here in the west, and Argonaut. And those companies have a price target of between 60 and 85 cents of us. If you wash that through with the number of shares, they're effectively inferring that our enterprise value of about 55 million will either double or triple if those price targets are achieved. And to give you a sense of the split between nickel and gold, Shaw's roughly see 50-50 between their target price, between the value of the gold and the value of the nickel, and Argonaut and Euroz are very similar. It's about 2/3, 1/3, 2/3 to the nickel, 1/3 to the gold. And in each of those cases, when they ascribe value to the gold, half of the value they ascribe to the gold is actually ascribed to Lady Herial, which we'll talk about in a minute, which is completely de-risked and hopefully is going to provide a significant amount of cash flow in the coming period. All the management team have been involved in nickel, in Kambalda and St Ives. 3 out of the management team and myself, the 4th, worked for WMC in Kambalda. We also worked for Goldfields in Kambalda and St Ives. So we have a long, deep history on the geology, the commercial, the operations, and the running of these assets in what, as I said, is one of Australia's great gold camps. Just briefly on Invincible, it is the pride of St Ives in that top left-hand corner. This slide came from their presentation It was the second last presentation at Diggers and Dealers this year. The asset is 4.5 kilometres long. So while it was officially found in 2010, they're really only starting to get their heads around just how big this is. These views looking south, our project is actually on the peninsula here to the south. We're not directly along strike. I'm not suggesting that we're along strike from Invincible, but the fact this asset allegedly is going to run until the late 2030s, you hear stories that it could be up to 10 million ounces. So it's 4.5 kilometres long. It's at least 2 kilometres deep, and it's still open to the south, heading towards that south shore of the lake. It's an incredible asset. And on the back of this asset, Goldfields is spending $300 million on a renewable energy project to take St Ives to about 70% renewable energy. You don't spend that kind of money unless you've got a very long future, and that future is underpinned by what is one of Australia's best gold discoveries, again, that you hear very little about. So zooming into the south side of the lake, this black polygon is the yellow polygon from the regional plan I showed you earlier. On this field of view, there's 7 million ounces of past gold production. 3.5 comes from the camp to our immediate north, Victory, Defiance, Leviathan, and 3.5 comes from Argo, Apollo, Hamlet, and Athena. So Victory Defiance was found by WMC and was mined from the 1980s onwards, and then by Goldfields when they bought the asset. Argo and Apollo were found by WMC and then mined by WMC and then Goldfields again when they took over the asset, and then Goldfields found Hamlet and Athena. 7 million ounces, all within a few hundred metres of our tenement boundary. Aaron Well, my exploration manager, and I worked underground at Victory Defiance in the mid-90s to late 90s. We're very au fait with the geology and the structure, the lithology, the host rocks, and we're firmly of the belief that the structures from Victory Defiance run south, and the structures from Argo, Apollo, Hamlet, and Athena run north. And as most people will know, gold in Kambalda, gold in St Ives, gold in the Eastern Goldfields generally is very structurally controlled. So we're blessed again. We've got 23 square kilometres sitting inside 2 of the great camps within one of Australia's great gold camps. And we've been very busy since we've shifted our focus to gold. We've now drilled nearly 30 kilometres on the gold program, 5 kilometres of diamond, and we've just kicked off an air core program looking to screen our tenement package for geochemical anomalies, looking for something significantly big, significantly meaningful that will shift the dial. But we have made a small discovery. That discovery is Lady Herial. It's 29,000 ounces. It's small, but it's beautifully located. And again, I'll take you through that. And we've completed the scoping study. All of those blue callouts are gold targets. The lighter blue ones are the ones that we've spoken most about and are the most advanced. Following up from Lady Herial, there's Hustler, Guiding Star, Kambalda, and some of our deeper drilling has occurred at Defiance West, sponsored by the West Australian government. And like all the people who were lucky enough to get one of those sponsored programs, we're very grateful and acknowledge the support that the government provides in looking for the next generation of big, large gold discoveries. So I mentioned we found Lady Herial last year in about early 2024. We've advanced it extremely quickly, rapidly. We put out a scoping study in June. The numbers are pretty impressive. At $5,000 an ounce, Lady Herial makes $31 million. We also recently announced an all purchase agreement with Goldfields, and I have a slide to talk through some of the detail on that. Our share of the future cash flow from a Lady Herial open pit amounts to $31 million, 70% of the free cash flow once both parties have covered their operating costs. It is a short project. That's great from a risk profile perspective. And I'll take you through some of the details. Remember, this morning, the gold price nudged $6,000 an ounce. If you wash that through, that extra $1,000 an ounce over the 15,500 ounces that will be recovered from this pit, and our share of that 70% of that extra revenue adds about another $11 to $12 million on top of that $31 million. Really encouraging, obviously, with a good cash position currently, and Lady Herial sitting right in front of us. We're extremely robust and very proud of the fact that with our existing shareholder base, we have a commitment, obviously, in these circumstances, not to have to raise equity under our current scenarios moving forward. So I mentioned that we've moved it very quickly from first discovery in April 2024. We've drilled it extremely aggressively, and sometimes when I present at conferences or investors and potential shareholders come up to our booth, they question why we've drilled so many holes. Leading up to the end of the first half of this calendar year, we had drilled 200 holes. Since the end of that first half, we've actually doubled that now. We've now drilled over 400 holes, and we've taken the total meters drilled from just around 9 kilometers. Again, we've doubled it up to nearly 19 kilometers of drilling. And the method, what might seem in that madness, is it's very shallow, it's very thick, it outcrops. And we realized very early in the piece that it was going to be highly economic. And with a firm view on our relationship with Goldfields and the fact that their gold plant to our immediate north was not full, we made a decision to drill this out and de-risk it as quickly as possible and take it straight to grade control spacing, i.e. that's about 6 to 8 meters spacing at surface. And I'll show in a minute what that means from the sectional basis and how we've been able to de-risk this deposit so quickly and so aggressively. First time mineral resource of 29,000 ounces. Because of all that drilling, it's extremely high confidence, 89% in measured, 10% in indicated, only a tiny fraction sitting in inferred resource. So really well understood. The geology, the mineralization is exceptionally well defined, and each time we drill, we're generally not getting too many surprises, and the model is holding together extremely robustly. Stuart Walters and Market Open have been encouraging me to do a webinar many times over the last few months. I've kept them at bay because we were working on the ore purchase agreement with our major shareholder, St Ives Gold Mining Company Limited. And I thought it would be far more meaningful to have a discussion with shareholders on a webinar once we'd actually got that information out. I'm pleased to say that the notice of meeting for the general meeting that needs to be held for other shareholders other than Goldfields to vote on this transaction should be lodged on the ASX today, which will have the independent experts report attached to it. It will also have a fair bit of detail on the terms of that ore purchase agreement. But in the meantime, we put out some information. We've agreed to sell all the material above 0.5 gram gold to St Ives. As I mentioned earlier, the final grade control model will be on an open put basis shared with Goldfields. The mine design will be done collaboratively. The schedule will be done collaboratively. And once we've agreed those terms, the gold sold will be calculated on the basis of that existing information. So importantly, there'll be no post-production sampling. There'll be no arguing over mill recoveries. The recovery will be fixed at 91%. We've done the metallurgical test work that suggests it's probably a bit higher than that, but this is a very big plant. It's a 4.8 million tonne plant. It will be a very small portion. There's no way of determining what our recovery will be. So we've agreed to fix it at 91%, which is what the recovery runs at the Lefroy plant. The costs on both sides, their haulage costs and their processing costs will be fixed, as will ours. So it's a very simple, it's a very low risk, and it means that shareholders and both companies can have very strong confidence that subject to the changing in the gold price, there'll be a lot of certainty about the cash flow that comes from Lady Herial when we start mining. So there are some conditions precedent to that transaction. I mentioned the general meeting that has to be held for the other shareholders. That will be on November the 6th. The independent experts report will be out today. I have no doubt that with a 70% share of the cash flow, I would expect their opinion to be fair and reasonable. We need to finish the department approvals. They've been in since the end of July, and we're very confident they should come in due course. And I mentioned we have to agree the grade control model, the mine design, and the mine schedule. We've got 4 months to satisfy those conditions, and then a further 4 months to get started. But we're pushing hard to get this going this calendar year. Goldfields and the staff at St Ives are very keen to see as much of this material and the high grade as soon as possible, and preferably before 31 December, as are we and as are our shareholders. I mentioned the gold price has moved quite considerably in the last few months. When we put this out in June, we used 5,000. It was already a bit higher than $5,000 an ounce. It's now obviously nudging $6,000 an ounce. And I mentioned earlier, when that washes through with our 70%, assuming no change or significant change in the costs, once we tender the mining contract, that shifts from 31 million up to nearly $42 million as our share of the free cash flow. Just underneath this table, there's a sensitivity table. Along the top axis is changing in the operating cost, and along the vertical axis is changing in the gold price. And you can see here, just to reconcile yourself, with no change in the operating costs and a 20% change, i.e. $6,000 an ounce, there's that same figure here, sits up here. But what this table does show, that worst case scenario, if there's a 20% drop in the gold price from $5,000 an ounce and a 20% increase in the operating costs, the asset still makes $17 million in the best part of 6 months. That's our share of the cash flow from that asset. Obviously, we'd rather have 31 than 17, and we'd rather have 42 than 31. But it's extremely robust, and I'll show you why that is in a moment. Next steps from here, as you can see, we've stamped off the ticks, is to tender and award the mining contract. That is currently out with 3 or 4 interested parties. Once we get the approvals from the government, we will clear the footprint. There's a few drill holes we need to do where there were large stands of trees, and we want to maximise the opportunity before we start to get as much gold in that final pit design as possible. I'll click through the geology very quickly. If people have got specific questions on the geology, I'm happy to circle back at the end of the presentation. As I mentioned, we understand the geology really well. You can see from the hot colours are sitting grouped in zones about 100 metres along, down plunge, down dip, by about 50 metres across. This is heavily controlled by structure and heavily controlled by the chemistry of the host rock. It's hosted in a rock type called Zone 4 of the Defiance Dolerite. I mentioned earlier that myself and Aaron have worked underground at the adjacent deposit at Conqueror, just across the boundary on Goldfields back in the 90s. This is kind of what it looks like. It's kind of a quartz breccia, pyrite rich, with sometimes plentiful free gold, which we've seen in panning and we have reported on from some of our RC drill returns. And I've highlighted some of the significant high-grade holes and thick holes that have been drilled into this zone. It is open to down plunge to the north, and we have reported that we found another lens called the Northwest Prospect, but we're not going to let those issues deter us from getting into this as quickly as possible. The mine design is not particularly sensitive to gold price, and therefore we want to get in and we want to lock this cash in at these current all-time highs. Just quickly in cross-section, why is it such a robust source of cash? Why is it not sensitive to changes in cost? Well, you can see here, it's a very shallow pit. It's about 30 to 40 metres deep, which is one of the reasons we knew we could drill it out aggressively. And on any bench in that pit, 50% to 60% of the pit floor is going to be in ore. The ore body comes to surface. It is where it's in the thickest, highest grade. It's 15 to 20 metres thick, sitting under 15 to 20 metres of cover. And as you can see through these best portions, and I mentioned just a second ago, the majority of the pit floor will be in ore. So edge dilution, ore loss is not a big concern. I've stuck in the plentiful slide. We've got many follow-up gold prospects. I showed you on the zoom in on Foster Baker, all those blue callouts. Plentiful looks a bit different. We think Plentiful could be linked structurally to the Victory Defiance auction camp to our immediate north. It's only about 1.5 kilometres from 3.5 million ounces here at Victory Defiance. As I said, Aaron and I worked underground here. We understand these structures. We think they may be terminating what is a very strong mag anomaly that we've reported on. We have a government-sponsored hole to drill that deep opportunity, but we've been drilling some surface drilling, getting some similar widths and grades to those we've seen at Lady Herial and Hustler, and this looks like it's adding to the size and scale of opportunities sitting on our tenure. There's no geological reason why there shouldn't be a lot more gold and potentially something a lot more significant in size than we've currently found on our tenement package. It's the same geology as the rest of the tenement package. Just remember, it was a nickel belt during WMC days, and typically, as the chief geologist of the gold, we didn't explore looking for gold around the nickel mines. So on nickel, obviously, a couple of props. I saw this morning in the Australian, there's a headline in the data room with Bridget Carter talking about the companies that are lining up to look at BHP's rumoured sale process for its nickel division. The most pertinent part of that for us is obviously the Kambalda concentrator, which shut in the middle of 2024. It's been on full care and maintenance. We understand they've had like 20 staff working there permanently, switching it on and off to keep it in the best possible maintenance condition. WMC, at the time of the sale of the gold assets, created an option over the nickel on all of Goldfields ground. It sits on our ground as well. And they have a preemption over the sale of any nickel ore, which has seen a lot of that ore obviously go into the Kambalda concentrator from other third parties once they sold those mines to the likes of Mincor, Panoramic and Independence back in the late 90s, early 2000s. It's extremely close. If they don't take up that preemption, they get to charge a 1% royalty. And as I said, there's strong media reports that the sale of Nickel West is being considered. We will certainly take part if that is the case, and we will be looking very closely at the Kambalda concentrator. It's a 1.5 million tonne concentrator or thereabouts. BHP Nickel West was running it at about 400,000 tonnes when they were receiving ore from Mincor prior to the Wyloo acquisition of Mincor back in 2023. Nickel mineral resource on that top banner, 1 million tonnes at 3.3%. At Baker, 2 million tonnes at just under 3% at Foster. This is the highest grade, highest quality, lowest capital startup nickel sulfide in the district, with great byproduct credits and very low deleterious elements. We are firmly of the view that regardless of what happens at the Kambalda concentrator, Lunnon Metals and our nickel assets will be a part of what happens when the cards fall, and we're going to be up to our armpits having a look if the process starts and if the data room is made available. I'll emphasise again, the scoping study level is only due to the uncertainty about the Kambalda concentrator. The rest of the technical studies in terms of mining, metallurgy, mine schedule, mine design are extremely high level, pre-feas, if not higher. Baker is fully approved. We can start Baker whenever we want, subject to finding a process route, and Foster Mine is fully approved to dewater and re-enter for the purposes of an exploration, and thereafter to pivot to production. It is a pretty small hurdle. So very short fuse time, low capital to move into production, excellent leverage to hopefully green shoots in the nickel space. I haven't looked at these nickel cross sections for a long time, but these numbers are impressive in any commodity. 12 meters at 7% nickel, 14 at 6.5, 9 at 5% nickel, 15 at nearly 10% nickel. When we put these slides together, you could almost triple the grade to get a gold equivalent. So 15 at 10 back in 23 would have been 15 at an ounce gold. With the shifting of the gold price and the fall in the nickel price, it's now about 1.5 times. Gives you a real sense of how high the gold price has run in the meantime. And as I mentioned, the study level is of the highest order. Baker fully designed, Foster South and Foster Mine fully designed. And both mines generate approximately 750,000 tonnes at around 3%. And between them, you're adding up to nearly 45,000 tonnes of nickel attributable between those two mines. We did put out a scoping study in July just to fine-tune the numbers. We'd had quotes and contract pricing out with underground contractors to finesse and improve the cost side of our previous pre-feasibility study from May 2023. We saw a slight change of the costs, but Baker especially, the all-in cost at Baker sits at just around $400 a tonne. So even at today's supposedly depressed nickel price of 15,000 US or 23,000 Aussie, Baker is still robustly economic. It still makes $70 million. And its MPV is around $50 million. We just need to solve the processing solution. And if the nickel price rises and the support comes in terms of the sale of Nickel West and that Kambalda concentrator, Baker especially will be part of what happens in the nickel sulfide space in what is one of Australia's and the world's great nickel camps. So look, we're extremely blessed to be, as I said, in one of Australia's great gold camps. 16 million ounces being mined at St Ives for gold. We've got nearly 10% of that belt that you never hear about. That education piece is one of my chief jobs now, is to remind people just what a great asset St Ives is from a gold perspective. Its history at Kambalda is well known for nickel. 1.6 million tonnes of nickel metal has been mined since 1966. People write nickel off frequently. It always comes back. We've got 100,000 nickel tonnes, the highest grade, highest quality nickel with the lowest deleterious elements and the best byproduct credits in the district. So that's the end of the slides, and subject to questions being submitted, I'm more than happy to take some questions, Stuart.
Ed, thank you so much, mate. Fantastic presentation, extremely informative as always. And we have had questions come through, so we'll get straight onto those right now. It's clear from your presentation you've have a long history at Kambalda. Can you fill some of that detail for us?
Look, I landed, Stuart, in Kambalda in 1987, straight off the boat from England as a young graduate, a 21-year-old graduate. I actually went straight underground at Victory Defiance, and I spent a year there before I got kicked out and my visa ran out. I came back in 94, again, went straight underground at one of the sub-assets at Victory called Britannia, very high-grade asset. And after a year, I got promoted. I ran Victory Defiance as a senior geologist for 3 or 4 years before I then got promoted to be chief geologist across the entire gold operations for WMC. And I mentioned earlier, I then got sold with the assets. And when we got sold, Goldfields were very focused that the core tenements at Kambalda, St Ives were the ones that mattered. And one of my first jobs when I left direct operational management in 2003 was to sell a lot of the peripheral assets that Goldfields didn't want. So we, without going into too much detail, there aren't many gold assets around Kambalda that used to be in WMC's portfolio that I didn't sell, that now sit in a range of our peers, our junior competitors. And I guess most appropriately on this slide is the Beta Hunt sublease. For my sins, I created that in 2003. I created the three-dimensional sublease. I'm pretty sure it was the first three-dimensional sublease in Australia. I sold that to a gentleman called Paul Chapman, who was running a company called Reliance at the time. And we only sold the nickel rights. We actually kept the gold rights. Subsequent to my departure from Goldfields, Goldfields, for some reason, decided to sell those gold rights. They ended up in a small private company that ended up in Karora, which has now ended up in Westgold. And I think some analysts put $1 billion on the value of the Beta Hunt acquisition as part of the takeover of Karora. So yeah, a long history. I sometimes have to pinch myself. I've done the maths. I think I've driven across this causeway nearly 6,000 times since 1987. And I'll tell you that's way too many. But between myself and Aaron, we've got the best part of 50 years experience. I honestly don't think there's two, if you want to use competent person and JORC, there are two more competent people actually working the ground that they own in the whole of the state of WA. So and we're very proud of that history. We all lived in Kambalda. We all see ourselves as ex-Kambalda residents and very much tied to the asset rather than to WMC or Goldfields.
And what about in the region? Have you had exposure to or have a view on the multiple assets and opportunities that exist in and around Kambalda, Kalgoorlie and Norseman?
Yeah, look, good question. I obviously mentioned that when Goldfields wanted to rationalise their tenement portfolio, I think when I was chief geologist at St Ives, we had something like 7,000 square kilometres. We pretty well trimmed it right back down to this kind of core 300 square kilometres in and around Kambalda and St Ives. So as you can imagine, like all the assets that sit in Lefroy or previously sat in Silver Lake out at San Alvano, the assets that sit in Torque down at Paris, the assets sit with Mark Declare, who was a colleague of mine at Kambalda back in the day in Astral, and to our north, a lot of those, the gold rights, a lot of the gold rights that sit in Oric, the asset that Oric mined, these were all inside the WMC portfolio in the 90s. And the reason that I guess is important is Goldfields very quickly saw where the value that, on the 80-20 principle, where did the real value lie? And they could see just how underexplored, just how large the opportunity was at St Ives. And we've become a microcosm of that. I often get asked about, why don't you go and do a deal? Why don't you go and acquire another company? Until we've determined why there aren't more gold dots inside this yellow polygon, it would be remiss of us with our knowledge and our background to not make damn sure there isn't a significant discovery to be made in one of Australia's best gold belts. So we're blessed again not to just have the ground, but now with Lady Herial and our cash position to be in a position to be able to do that really aggressively over the coming period.
And can you give a quick summary of the next steps for Lady Herial?
Yeah, I mentioned the CPs. So the EGM will be held on November 6th. We obviously need the mining approvals. We've got the tender out with mining contractors currently. So by the end of the month, we'll have a sense of how much or how little the costs will have changed from the scoping study. And then really, we're on granted mining tenements. The traditional owners have already cleared the footprint. Once we get those approvals, it really is kind of, wind up the engines and get going. The contractors we're talking to, again, very blessed. A lot of them have got a lot of availability at the end of October, beginning of November. So we should, subject to getting the approvals and finishing the EGM, we should be able to roll in and get going really quickly. And as I showed you on those cross sections, the ore body sticks out of the ground. So as soon as we start clearing the site, as soon as we start digging, we are delivering ore to the ROM pad, and the ore purchase agreement will kick into force and start providing early cash flow. So yeah, we've been just pushing so hard because it is priority 1, 2, and 3 on behalf of our shareholders to make sure we get that cash. And the gold price has moved in our favour, and even more driver to lock that value in.
Can you do a quick SWOT analysis of LM8 versus your peers, Ed?
I think our strength is our endowment. It is the address we're in. I think our weakness is people probably still see us as potentially a nickel stock. And we're not embarrassed or ashamed about that. We obviously have 100,000 tonnes and more of high-grade nickel. Yes, nickel's been a pretty ugly place to be, but there is no substitute for quality, and there is no substitute for address geologically for gold or nickel. So while it might be seen as a bit of weakness, I think it's a strength. The opportunity is exactly this blank space, this hole in the golden donut. There could be nothing there, but boy, there could be anything there. So that's a real opportunity. And I don't see too many threats. I guess the threat from I'm a pretty significant shareholder myself. My founding colleagues, Darren Headley, Ian Junk and Tao Lee, all ex-WMC employees, are very big shareholders. And obviously Goldfields is a very big shareholder. The threat is that the value, the discovery, the cash flow doesn't get reflected in the share price. But I can't do anything about that. My job is to promote the opportunity. Aaron's job is to keep doing the high quality, high technical work he does. He's found 3 deposits now in Kambalda. I had an old boss called Luke Tomkin, who is currently the MD of Vault, Silver Lake, and he used to joke that if a geologist found anything, he should take them around the back and shoot them because they'd used all their luck up. Aaron's found 3 things. He's found Baker, he's found Lady Herial, and during his WMC days, he found a deposit called Pinnis to the west of Victory Defiance. So that's not luck. He's one of the best geologists I've ever worked with.
And importantly, you're still alive.
Sorry, Stuart?
And importantly, you're still alive.
Correct, yes. Yes. I kept him out of Luke Tompkins' hands.
And Lady Herial Scoping Study shows robust economics with a 6-month mine life. How does Lunnon plan to leverage its short life project to build a broader gold production pipeline across Foster Baker and nearby prospects like Hustler, Guiding Star and Cooee? I
think we've been really fulsome with our disclosure about our strategy. We want to self-fund. I take great pride in the fact that the shareholders who've stuck fast with us from the early successful nickel days can take confidence that if we get Lady Herial right, we don't need to raise equity at what we consider to be a low share price. And we've been prudent and we've been a bit cautious. But now that Lady Herial is turning from an opportunity into cash flow that we can bank, I think we can loosen the purse strings. We can be a lot more aggressive. So the strategy isn't to look for small things. I'll make that clear. Aaron doesn't go out looking to find 30,000 ounces. We're looking for big things. We're looking for things that will make a difference and move the dial. But in that process, small things shake out. So on the smaller side of the asset, those near surface, high grade, quick to mine assets like Hustler and Cabana and Guiding Star you mentioned, the goal is to have one ready to go as soon as Lady Herial finishes. And because we're on granted mining tenements and because we have a great access arrangement with the traditional owners, because this area is heavily disturbed, you can see just on this aerial photo how much historical disturbance there is. The permitting hurdles, the fuse time to get going for those small things is extremely short. So we can cycle through Lady Herial and Hustler and Kambalda and continue to put hopefully cash in the bank and then use that position to really leverage some pretty aggressive deep exploration drilling, looking to find something more significant.
The old purchase agreement with St Ives Gold Mining Company locks in cost certainty and recovery at 91%. What does this structure mean for nearby cash flow generation? Near-term cash flow generation, and how do you see this partnership evolving beyond Lady Herial?
Look, the ore purchase agreement we've agreed with Goldfields is just on Lady Herial. I'll make that clear. Elsewhere in our package, they retain a preempt, which is kind of based on the nickel preempt I mentioned earlier that WMC, now Nickel West, have on the nickel offtake. But we get on really well with Goldfields, as you would imagine, with the shared history and our knowledge of the asset. If this is successful, and I can't see why Lady Herial wouldn't be, it hopefully will be a template to roll across those other more readily available smaller assets that I mentioned earlier. The fixed recovery and the fixed costs, that just gives so much certainty. Certainty to us as the operators, certainty to Goldfields as a recipient of the ore, and it gives certainty to the shareholders. And a lot of these ore purchase toll treatment agreements get really complicated. There's a heap of post-production sampling. Some of it's just statistically or geologically not particularly valid. Then there's arguments about call factors and recovery. We haven't got any of that. You know, we're going to give this data, we're going to give the model to Goldfields because it's already been drilled and there's really not much more to do. They're going to agree and have roughly the same model within, 2-3%, you'd imagine. So we'll agree the model, and that's the end of the story. Then it's dig it up because it's thick, because it's covering most of the pit floor. Dilution and ore loss really won't be an issue. So that certainty, I won't be lying awake at night worrying about recovery and mining. And I'm sure there's a lot of small junior companies that are going through this process that just won't have that comfort or that certainty. So that's important. It allows us to be really aggressive and confident with the spending of a portion of that free cash flow on those other exploration opportunities that I mentioned.
One on the nickel here, with Baker and Foster containing over 90,000 tonnes of nickel metal resources and fully approved mine access, how is Lunnon positioning itself to move quickly when the nickel market conditions improve, especially given uncertainty around the Kambalda concentrator and the potential sale of BHP's Nickel West?
Look, yeah, Stuart, the elephant in the room is obviously we have nowhere to currently process Baker or Foster. There's no shying away from that. When we only had the nickel focus, that obviously was not just a road bump, it was a massive handbrake. I take great confidence in the fact that these media reports that are talking about BHP and nickel, there is clearly interest from smart, maybe contrarian private equity investors and others who are long nickel. The people who are seeing the opportunity in the nickel space are similar to some of the people who saw the opportunity in the copper space. I think these parties, maybe they're high net worths or family offices, or some of this private money, it's kind of generational money. They're not looking for 3 months or 9 months. They're looking to acquire assets now that will have a 20 or 30 year time frame. So I think, I've said it time and time again, Baker is the highest grade. It's only 100 meters down. The pre-development capital at Baker is almost insignificant relative to the value of Baker. And if the nickel price improves, and I think it will, and there's the old adage sometimes that when BHP is selling things, it's probably the time to buy them. There's clearly some smart money. There's some contrarian investors who are seeing now at the depths of the nickel market the opportunity to accumulate and hoover up what are high quality assets. We'll be part of that, and we've done all the work, all the hard work, all the definition. We had actually finished all the drilling before the crash, and we got the things permitted. So they're literally sitting there at no cost. To maintain those mine permits, mine approvals is almost negligible, and they're ready to go. So we will be part of any conversation that happens in the nickel space in Kambalda.
And the company has $15.4 million in cash and no debt. How will you prioritise capital allocation between advancing the Foster Baker Gold program, preparing the nickel assets for the next cycle, and is additional funding expected to be required at any stage?
Under our current scenario, I'm not expecting additional funding. If BHP, I saw a room, like the report in the Australian today said, that the Kambalda concentrator would go for less than 100 million. Well, look, if that landed in